Think of this as your crash course in mortgages, without the boring bits. I'm Monica Williams, and welcome back to But It's My First Time. We're tackling mortgages today. The types, the pre-approvals, and those interest rates that everyone's talking about. But don't worry, you won't need a finance degree to get this. Picture this. You find your dream home, but unless you've got a suitcase of cash lying around, which better be put in the bank, you'll need a mortgage to seal the deal. A mortgage is a fancy word for a loan that helps you buy a home. You borrow money from a lender, typically a bank, credit union, or mortgage broker, and you agree to pay it back over time plus interest. Think of it like renting money, but instead of a landlord, you're paying a lender. Bonus, at the end of this rental, the house is yours. Now let's dive a little deeper into those loan types, because this is where you start to see how they can work for you. Conventional loans are super versatile, and the down payment can be as much as 3%, which makes them a great option for many first-time buyers. However, if you put down less than 20%, you'll need private mortgage insurance, also called PMI. The good news? Once you build 20% equity, you can request to have the PMI removed, which can lower your monthly payment. FHA loans are perfect for buyers who may have lower credit scores or less saved for a down payment. You'll need as little as 3.5% down, but here's the trade-off. FHA loans require two types of mortgage insurance. There's an upfront premium, which is typically 1.75% of the loan amount, and a monthly mortgage insurance premium, MIP. Unlike conventional loans, this insurance doesn't drop off automatically unless you refinance or make a larger down payment up front. VA loans and USDA loans, though, they're like the superheroes of the loan world. VA loans are an incredible benefit for veterans and active duty service members. Zero down payment, no PMI, and often lower interest rates. USDA loans are ideal for buyers considering rural or suburban areas, and they also come with no down payment. It's definitely worth exploring if your dream home isn't in the middle of the city. Still not sure which option is best for you? Don't worry. I have a network of trusted lenders who can help you navigate these choices like a pro and find the loan that's just right for you. Let's talk about pre-approval. Think of it like getting your concert ticket. It gets you in the door, and it tells everyone you're serious. Without it, you're just window shopping. Pre-approval isn't as scary as it sounds. It's a simple process where a lender evaluates your financials, like income, credit score, and debt, to determine how much they're willing to lend you. Plus, it saves us time by narrowing our search to homes you know you can afford. And here's the thing, pre-approval isn't set in stone. It's more of a starting point, giving you the clarity and confidence to shop smart. If you need help finding the right lender, I've got you covered with a network of trusted professionals who guide you throughout it. Remember, if you're still sorting out your budget, check out my other video, The First Time Buyer's Guide to Budgeting for a Home. It's like a financial warm-up before the big game. So, ready to get that pre-approval in hand and take the first real step towards home ownership? Let's do this. Now for the part that makes your wallet sweat, interest rates. Let's break this down without the boring bits. First, you've got two types of interest rates, fixed and adjustable. A fixed rate is like your favorite playlist. It doesn't change, so your monthly payments stay consistent. An adjustable rate, it's more like a surprise mixtape. It starts lower, but the beat and your payments can shift over time. Sometimes it works, but it's not for everyone. What makes your interest rate go up or down? It's like baking a cake. Lots of ingredients go in. Your credit score, the loan type, your down payment size, and even the economy all play a part. The better your recipe, the sweeter your rate. Oh, and here's a little pro tip. Ask your lender about a rate lock. It's like snapping a screenshot of your rate and saving it before things change. That way, you're not left scrambling if rates suddenly jump. Interest rates might seem complicated, but once you break them down, they're not so scary. See, mortgages don't have to be scary. Now you got the basics. Loan types, pre-approvals, and interest rates are no longer a mystery. Ready to take the next step? Be sure to download my free guide, Ready to Buy Your First House. Know your key numbers in the description below. And don't forget to hit subscribe because we got so much more to cover. Buying your first home is a big deal, but you've got this. See you in the next video.